Welcome to Strategic Investment Realty's latest investment property, located in Leduc, Alberta, Canada's gateway to opportunity, known as the Madison. For the past 20 years, Alberta has led the nation, with an average GDP growth of 3.4% per year. Its population of 3.7 million has a median age of 35.6 years. It is the youngest of all Canadian provinces. With an unemployment rate of 4.9%, it is the lowest in Canada, well below the national average of 7.4%. And it has the fastest rate of creating higher quality jobs, higher paying jobs than any other province. Alberta certainly is one of the best and strongest economies in Canada. Supported by the Fraser Institute's recent report, where it ranks Alberta first among Canada's top-ranking provinces in areas of corporate income tax, fiscal prudence, personal income tax, corporate capital tax, and labor market regulations. It attracts investment. From the recession, it has rebounded and recovered beyond expectation, expanding at 5.2% in 2011. Most private sector forecasters expect Alberta to lead all provinces in both 2012 and 13 and beyond. It has the highest productivity. The GDP per capita, which is how we measure our standard of living, was more than $67,000 per person in 2009. That's 22% higher than its closest counterpart, Saskatchewan, and nearly one-half more than the Canadian average of just over $45,000. It offers the most competitive business tax environment in North America, coupled with a highly efficient and competitive transportation logistics system, and Leduc is in the center of this corridor. With no provincial sales tax, an overall low tax regime, streamlined regulations, ultra-modern infrastructure, and a highly skilled and productive workforce, with having the highest research and development spending per capita in all regions of Canada, Alberta is a magnet for money. Edmonton is very near Leduc. It's a commuter city to Edmonton. In 2012, KPMG did a competitive alternative study, and Edmonton was ranked as third most competitive in all of North America, with a population under 2 million. The Conference Board of Canada rates Edmonton's economy as highly diversified, more diversified than Montreal, Toronto, or Calgary. Brookings Institute ranked Edmonton as having Canada's top performing economy in 2011. Further to that, Edmonton's region is outperforming Alberta and Canada in both job creation and labor force growth, with creating over 6,000 jobs in September of 2012. Recent employment figures show that the number of individuals over 15 years of age in the region is increasing at more than twice the national rate, and well above the rates for Alberta as well. Taking a closer look into the area, Leduc has grown exponentially, with a 43% growth since 2006 census. In 2009 and 10, it grew by 7.28%. To keep this in perspective, population growth above 2.5% is considered excellent. The 2012 municipal census for Leduc gave a resident count of 25,482. That's an annual average growth rate of 6% over the last 5 years. This growth spurt has prompted the city to annex an additional 1,300 acres from a surrounding county. This plan is in direct result of our city's rapid growth of 50% over the last 6 years, according to the Leduc mayor. Population, growth, investment equals jobs. Why? The Nisku Business Park is located adjacent to Leduc. It is Canada's largest and North America's second largest energy park. It is a key component of the strong and stable economy in Alberta, international region. It accommodates more than 600 companies. It has grown from 2,200 acres to more than 8,000 acres. Businesses employ close to 30,000 highly skilled trades and professional workers, including those working in the field. It has an estimate of 8,000 to 10,000 local workers who are employed directly in businesses in the park. 75% of Nisku-based businesses are doing business globally. What that has done is created a community, a burgeoning community, that is perfect for young families. It has a low crime rate, diverse amenities and services like a big city, less traffic than the big city, and a full range of health and educational education, and community services. You get big city life in a small community. The sectors that it employs is broad-based and in leading global industries. Over the next 25 years, it's estimated that another $218 billion will flow into Alberta. With oil prices rebounding rapidly from 2009 lows and growing global demand, particularly in Asia, and limited increases in global supply, oil prices are expected to stay high by historical standards. By 2014, the price of oil is forecast to be around $108 a barrel. Currently, we're seeing about $140 billion directly invested in the oil sands project. What has happened with the recovery is we've seen record petroleum and natural gas land sales in 2011. For every dollar invested, you're seeing $7.50 in stimulus generated to build the housing, to build the servicing, to service all the new employees and investment. Every dollar increase in the price of oil is $141 million into Alberta's coffers. It's a global world, and Alberta is the leading edge. It's diverse, and it's building global distribution channels. It's an incubator for agribusiness. It's producing state-of-the-art food processing and strong global partnerships, which are renowned for manufacturing companies supplying components to the oil sands. The Nisku Business Park is a key transportation link for air, rail, and transport in the heart of Alberta's economic corridor, one of North America's top wealth-producing regions. It's a growing center of research and excellence with a focus on value add and advanced manufacturing. It's an expanding commercial center that's attracting business and investment abroad. It's a source of highly skilled workers with access to first-class educational facilities. The burgeoning residential community is housing all the new investment, and the attraction is safe communities, active outdoor lifestyles, and quality recreational facilities. Edmonton's International Airport is the 5th busiest in Canada. It's going through a state-of-the-art expansion with over $20 million in land invested to house the expansion. Introducing the Madison. It's a 2-building, 3- and 4-story walk-up condominium buildings. There's 52 units in total, and it's in the mature, lush, single-family neighborhood. The Madison is enhanced by an abundance of parkland, its close proximity to schools, and convenient access to many other urban amenities. It's in the center of Leduc. When you look at the main highway, which is the highway between Edmonton and Calgary, you can see that the property is minutes from the Nisku Energy Park, minutes from the airport, with easy access to transportation and an easy commute to Edmonton. This is an aerial, and referring to the abundance of parkland, we can see that right across the street is a school and a large park, and within 5 minutes walk it's the civic area with a lake and city hall, good access to all the recreational facilities. The property itself is well built. It's built in 1972. It's got great floor plans, good suite mix, and lots of green space, and it makes for a great rental property. We have secured exclusive rights to sell 26 of 52 units, and giving a really good breakdown of different styles and types. It's got a very unique floor plan that's a 2-bedroom, 2-story. You don't build them like this now. The original architect was very smart in its design. With 1 bedroom starting around 700 square feet, 2 bedrooms around 850, and 2 level 2 beds around 1,000, there's a good selection which appeals to a broad resident market. And prices start around $133 for the 1 beds, $147 for the 2 beds, and $163 for the 2 bedroom, 2 level. The building has had a full reserve fund study, and the contingency is well funded. The building has gone through substantial renovations with over $700,000 spent. The upgrades were done that appeal to a better resident-tenant profile that is willing to pay more rent for better quality finishes. The types of finishes used are durable to minimize replacement and upkeep, making investors happy. Common area upgrades identified in the reserve fund study that needed to be addressed were addressed. Cosmetic upgrades throughout to modernize the common areas, energy efficient heating, and lighting to reduce operating costs, and maintenance-free finishes that are durable and require less maintenance and upkeep and replacement. The area is spacious, with lots of electrified surface parking. Every floor has its own laundry room with new machines. Room sizes are larger than newer units being built today, and from a rent and often appeal to a renter that wants more for less money. It is professionally managed by Braden Equities, a company that has successfully managed multifamily properties in Alberta, Yellowknife, and Northwest Territories for the past 30 years. Braden prides itself in using technology and keeping up with the advances so that it can provide great reporting, comprehensive reviews, and easy access to its investors. The floor plans minimize sound issues. Galley kitchens separate bedroom and living areas with balconies off the living area. Bathrooms and storage are adjacent to common area hallways and stairways, and the bedrooms are on the quiet side. We know from experience there are 4 main issues why tenants leave: noise, parking, storage, and living space, and in that order. Let's look at the cash flow. This is a typical cash flow for an average sized 2-bedroom. Based on a 25% down payment, 30-year amortization, and today's current 5-year rate of 3.09%, you will receive over $1,400 per year in positive cash flow. That's $119 per month. Our forecast is based on a 3% vacancy. Our financial model also uses 3% inflation for expenses, revenue, and appreciation. Keeping in mind this building is 100% occupied, so cash flow will be slightly greater. The cash-on-cash yield is almost 4% in year 1, rising to 6% by year 5. Very strong cash flow proposition. And the beauty of real estate is that we can magnify your returns with cash flow, leverage, and appreciation. According to StatsCan and the Canadian Real Estate Association, the national average home price has risen 6% per year for the past 30 years. Based on 3%, your tenant pays you 7% return on invested equity. With your 4% cash and with inflation at 3%, you get 12% on invested equity for a total return of 22% per year in the first year. And that grows up to 27% by year 5. Let's recap. Alberta is Canada's fastest growing province and has led Canada over the past 20 years and is forecast to continue to do so. Leduc Nisku Energy Park is Canada's largest energy park, housing over 600 companies. Leduc is Canada's 9th fastest growing city, growing at an average of 6% per year for the past 5 years. Edmonton is Canada's 5th busiest airport, and it is going through a major expansion. Why invest in Madison? It offers strong positive cash flow from day 1, 100% occupancy with stable tenants and demographics, an ideal central location which attracts tenants and close to all the amenities and, more importantly, the jobs. The building's been completely renovated with a healthy contingency reserve for any future needs, and we're in Alberta, so we're on solid economic foundation for continued growth. We offer a website. It's easy to log in. There's a lot of reports both on building and the area, and we constantly are uploading new information and new articles. What are your next steps? To reserve a unit or get more information, call us today. Here are our contact details. You're invited today by a real estate advisor. This is going very quickly. We only have 26 units, so we encourage you to act soon. Thank you for your time.